We are a Paris-based organization that operates globally, focusing on supporting the adoption of the XRP Ledger, which is an L1 decentralized protocol launched in 2012, mostly associated with Ripple, but basically designed from inception to support financial service-based use cases, from cross-border payments to different types of asset tokenization and asset transfer.
As many of you know, Ripple started focused on payments. That's still very important to what we do, but we've really expanded beyond that. So now there's this sort of broad offering, set of offerings, I should say, that Ripple has put together, some organically, some via acquisition. I think we'll talk about that.
You know, there's a saying that says that agents are equal citizens in a Web3 blockchain economy.
They're non-tribal.
Exactly, they're non-tribal. So my question again, since Ripple is basically building the future for financial service, do you see agents almost like as another customer segment that we would need to serve in the not so very far future?
So the one thing I want to call out is, you know, the lending protocol that's currently up for vetting and voting in the community is a very, very big deal. It's probably the biggest shipment since the XRP Ledger itself in terms of code complexity. That's what I'm hearing in every conversation with RippleX engineers and beyond.
We're seeing much more movement, I would say, towards the more payment purpose-built blockchain rails, such as the XRP Ledger and others. And in essence, we're seeing much more that the conversation is moving from which stablecoin to issue to on which rails and which settlement rails are we going to do it.
Hey, what's going on, family and friends? Ray Fuentes here. Paris Blockchain Week wasn't about hype, it was about convergence. AI, regulation, institution, payments, all moving towards one thing. But before I begin, it only feels right to start with the team that brought us together. XRPL Commons. Here's Odelia Torteman, XRPL Commons Director of Corporate Adoption, on their company's mission to scale institutional adoption on the XRP Ledger globally.
So Odelia Torteman, I lead corporate adoption for XRPL Commons. We are a Paris-based organization that operates globally, focusing on supporting the adoption of the XRP Ledger, which is an L1 decentralized protocol launched in 2012, mostly associated with Ripple, but basically designed from inception to support financial service-based use cases, from cross-border payments to different types of asset tokenization and asset transfer. I've been doing digital finance for 15 years now, previously with the World Bank, beforehand with Deloitte, leading the blockchain and the fintech arm. And I'm extremely excited to be exploring this really inciting intersection with our panelists.
Now let's talk about what's really shaping this market. Regulations. A global framework is being built in real time. MiCA in Europe, evolving frameworks in the US. But here's the nuance that most people miss.
I want to move a bit to regulation, right, Giovanni? You've mentioned this. I think everybody in the room here are pretty much familiar with how structured this industry has become, right? Led first and foremost by MiCA, soon to be introduced the next generation of MiCA, something to look forward to. Also in the States, of course, with the Genius Act. In Asia, there are different types of frameworks, all looking into how can we structure, standardize, classify different types of digital assets with a huge focus, obviously, on stable coins and different token standards. My question to you, I mean, from one side, of course, it's clear where are the advantages in having such a structured picture. But from the other side, where do you still see the gaps within where regulation do not yet cover certain types of activities or assets?
Well, yeah, again, this is quite an important point. Regulation, first of all, just had quite a lot of reliability, just helped us to expand. I can see that quite a lot of us today are in jacket, very, very formal. If you think a gathering of blockchain 5-6 more years ago was not going to be the case. So regulation really helped us in building this reliability and access to masses outside the core crypto business. But there is one point that I'm noticing, and again, you mentioned about MiCA, you mentioned about the American regulation that I do not know very well. I'm mostly focused in Europe, but there is one point. We just are incurring in the risk in getting like different silos. So what MiCA is stating for Europe is not what's happening in the United States. And again, just to remain to stablecoins, all of us that we want to apply for MiCA to get this license, we had to rush at the end of 2024 to delist the USDT, which was until the day before our main stablecoin was 90% plus. But we understood that MiCA had a different approach for that. In United States, of course, they see things in a different way. There is the risk that these different regulators on continental base, they speak different languages, and that one in the long term is not going to benefit the overall clients, that one, because you want to have someone that is harmonized. I just hope that this is the next step is continents, and then we're going to build something on the top of that. But definitely there is an issue and there is a pain point that, because again, USDT using the vast majority of the world, not used here, and we suffer for quite a lot of clients, and they decide, okay, you know, I like your service, I like your exchange, but you do not provide what was my main currency, then I'm going to find that one somewhere else.
This isn't regulation versus innovation. This is regulation enabling scale. But fragmentation, that's still the bottleneck. At the XRPL Zone in Paris, Ripple told a very different story than the one crypto originally started with. A complete U-turn from the early hoodie-wearing crypto bro days.
As many of you know, Ripple started focused on payments. That's still very important to what we do, but we've really expanded beyond that. So now there's this sort of broad offering, set of offerings, I should say, that Ripple has put together, some organically, some via acquisition. I think we'll talk about that. That really create a much more robust approach to delivering on the Internet of Value. So initially, when we started, people were super skeptical. We really leaned into, from the beginning, so maybe something that hasn't changed, we wanted to work with existing players, with financial institutions, with regulators. That did not make us the cool kids back then, because the blockchain ethos was very much a, no offense to any in the room, but a hoodie-wearing crypto bro culture, right? And we were not. We wanted to work with institutions and make them better. As it turns out, I think that was the right bet. We are seeing companies that used to basically kick us out of meetings, meaning large banks who said, don't talk about crypto, don't mention the word blockchain or Bitcoin or what have you. They're now coming to us because we've been very consistent in how we've approached the market, and that's being a reliable, compliant partner for institutions.
I think that's definitely something that attracted me in the early days in our conversations was I always believed that blockchain was a tool to increase the level of trust in any industry, in the financial world in particular, and was quite opposed to this idea that blockchain was going to replace the traditional finance industry. So we met at that point. At the time it felt very contrarian to think this way. But it seems today that it became the mainstream way of thinking.
We're getting there. We're getting there.
From hoodie culture to institutional infrastructure, XRP wasn't built to replace finance, it was built to upgrade trust. And then came the biggest shift of all, AI agents.
I think this leads us to indeed a great area of the agentic finance, right? The intersection of agents operating on blockchain rails. Now even more so as we have more tokenized assets and also more advancements across agents. And you know, there's a saying that says that agents are equal citizen in a Web3 blockchain economy.
They're non-tribal.
Exactly, they're non-tribal. So my question again, since Ripple is basically building the future for financial service, do you see agents almost like as another customer segment that we would need to serve in the not so very far future?
I'm very excited about this intersection. Also, like probably most of the room, a little bit frightened about the prospects when you just see, you know, how these LLM models have improved in such a short time and how they're making you so much more productive today already, and given we're on an exponential curve. But why I'm particularly excited about the whole intersection of institutional finance, blockchain technology, and you know, AI is really around this notion of, you know, basically blockchain solve for trust in a nutshell. And I think for the agentic commerce to really take off, that's probably one of the biggest hurdles it faces. So whilst I think AI is extremely powerful around, you know, kind of like being the intelligence layer of the financial system of the future, I really truly believe a blockchain like XRPL can be sort of like the compliant, trusted settlement layer that will benefit agents. If you think about it, well, you know, will these agents be more productively operating on legacy financial market rails? Probably not. They need like micro transactions. There's no economic viability on the legacy rails around that. They need like, you know, seconds of transfer times. They can't deal with T+2, and they need to be able to operate across networks. And I think blockchains bring all of that with it. And if you think about the usage of AI now at financial institutions, mostly around like intelligence tools, sourcing, maybe compliance-related information, and I think the true power comes from really deploying these or empowering these agents to act on behalf on financial traction. And again, today they can't really trust it, but if you couple it with a blockchain on the other side, I think there's definitely something there. And so we're supporting actively projects on the XRPL like T54, and we in fact we held an on-site with the Ripple X team just recently to think more deeply about this, and yeah, to make sure XRPL is pole positioned for a future where increasingly it's not only going to be humans acting in the economy but also agents.
Absolutely, and for us at XRPL Commons, obviously the agentic web is a key priority pillar. We've been doing a lot of work to frame a bit this world, to segment it a bit into key categories, and just over the weekend we had the XRPL Paris Blockchain Week Hackathon. One of the teams there actually built an app store for agents whereby they can be paid and pay for their consumed APIs, which was awesome. a very interesting one, as well as credentials to agents on the XRP Ledger.
This isn't coming, it's already here. Agents transacting, agents executing. This isn't user-first finance anymore, it's machine-first. But as systems converge, a new tension is emerging: control.
The one thing that I would say is, if you are like a financial institution, the number one thing you absolutely can't outsource is your clients. And that's something we see actually sometimes a bit surprisingly, banks saying, okay, I'm going to use some white label solution from a partner and I'm going to share the KYC data with them. And the lines are really blurring between who's a crypto fintech player and what's a bank. And it's a bit naive to think that these players are not going to come in and take your clients and start selling them other products. So I think you always build on your core and make sure that you cover the elements of the process that you think are highest risk. If you're a custodian bank, you build up your own custody for sure. But like number one thing, you should keep your client interface.
Maybe just because you mentioned ETPs, I think one thing we found too is when you're taking on multiple custodians potentially to help manage risk across some of these ETP products, we found that there's no standard in workflow process. Yeah. So you'll even find different workflows depending on who you're working with for the same service. And that makes it really, really difficult for your different supporting teams to manage that.
This isn't just a tech shift, it's a data war. And that's why institutions are building in-house. So what's actually being built on the XRP Ledger?
Again, double-clicking a bit on the architecture and the DeFi stack that the XRPL brings. It is such a rich protocol, right, which supports different types of asset classes, which was designed from inception in an enterprise-grade mindset with a lot of compliance, pre-built applications, a lot of native tooling indeed to enable that. How do you explain the ledger for financial institutions or for different other players, the DeFi stack, in one sentence?
So in one sense, I would say we've been building the core infrastructure for the financial system of the 21st century. We as Ripple, in our sort of like vision statement, use the term Internet of Value. So kind of like enable a world where money moves like information moves today through the internet. And if I think about how to decompose that, I really think at the core, is the stack around like settlement and liquidity. So, the ability to do payments, accounts, and there's something magical about the fact that anyone in this room could be anywhere in the world and can transfer value with each other in 3 to 5 seconds, based on the internet connection. There's something truly powerful to that. And things like, the native DEX, which was obviously the first DEX. I think most of the people here in the room probably know that there was in the blockchain industry. So that's kind of like the bottom stack. Then on top, things like tokenization tokens, IOUs, multi-purpose token, which was released late last year, which really kind of like enable issuance of assets, things like token escrow and other functionalities. Then the third layer really being around like compliance and identity, where the ledger obviously has a lot of different functionalities already in there, more to come, including the decentralized identifiers, verified credentials, permission environments on the ledger itself. And that's really to make the technology compatible with real-world regulatory requirements that do exist. And large companies cannot compromise around that, obviously. And then 3 and 4. So 3, I would say, as we've been engaging with larger and larger financial institutions, including also, internally with Ripple Prime, we've just come to the conclusion at some point, I think it was early last year or even slightly before that, that privacy is probably in a non-negotiable. Not privacy in the sense that the kind of like the original cyber punks have thought about, but more like, hey, privacy is important to protect users in the existing traditional financial system. And so we're obviously working on that with the community in terms of like enabling confidential transfers alongside multi-purpose tokens. And then lastly, it's really credit, which is the sort of like elephant in the room in terms of what's up next. And if you think about it, so the one thing I want to call out is, the lending protocol that's currently up for vetting and voting in the community is a very, very big deal. It's probably the biggest shipment since the XRP Ledger itself in terms of code complexity. That's what I'm hearing in every conversation with RippleX engineers and beyond. And look, if you think about the role of credit in the financial system, it also plays a huge deal. It's kind of like where capital is put to work, where value is being created, and essentially it's sort of like the oxygen in the financial system almost. So it's not just like another feature, but it really opens up that whole category natively on the XRPL, and so pretty excited about that one.
Absolutely, and since we dive directly to the lending protocol, for those of you who are not familiar, basically we have an upcoming native lending amendment which is coming, together with a single vault amendment which is coming to support that. And unlike other lending protocols, this one is an under-collateralized one, which was designed from inception to support the operation of everyday businesses. In crypto, as we know, many of the yield and lending are over-collateralized, which potentially could be good to some of the more crypto-native players. But when we're dealing exactly with institutional players, the fact that this one is an under-collateralized, designed to enable enterprise indeed to harness the ability to provide credit on-chain, and then to translate it also into yields and to extend the value proposition is a truly groundbreaking. We've also had here the lending product group, of course, with some of the key builders, from VS1 Finance that are now working to institutionalize some of these things, and to other of our partners here from Soil. From the conversations that you're having, how do financial institutions are reacting to these lending protocols? What are some of the use cases that you can share with us from the conversation? We're having a lot of interest on that, and really how does one structure it from an enterprise perspective?
Thank you, Odelia. That was such a well-articulated question. I'm almost not having too much more to add there. But no, kidding aside, look, as you implied, this was really designed with institutional grade, real-world financial use in mind through the many conversations we've been having with financial institutions, and to kind of like oversimplify it. So it's built in a way that, what blockchains do best, things like settlement, in a deterministic way, obviously on XRPL, that's where we want XRPL to sort of like, at the core of the value. And where, financial institutions already have pretty mature models around risk management, underwriting, and that's kind of like kept off-chain so that this protocol can really be seamlessly integrated in some of their existing workflows and provide value where blockchain technology is poised to provide the most value. So that's kind of like the key narrative, and that means, there's like basically liquidity pools, single asset vaults, liquidity pools that can be spun up, specified, fixed sort of like term structure that can be spun up and then will be obviously deterministically settled, and the ledger manages that process. And on the other hand, the underwriting and risk factors, which are managed basically by financial institutions. In terms of use cases, so I think one piece we've already been vocal about with some of the partners involved, Evernorth, for example, is really bringing XRP yield in the hand of institutions, putting XRP to work. So we're working with partnerships with Evernorth and Ripple Prime as well to sort of like source risk capital and provide a yield in that sense. The other area where we're pretty excited about, where it touches RLUSD and other fiat stablecoins, is really this notion of PayFi and sort of like removing friction around like financing for working capital. So some pretty exciting partnerships are in the pipeline there, where the lending protocol is poised to add real world value at scale. The last one I will touch on is this notion of like repo market, which is essentially sort of like a secured loan transaction where we're also seeing a lot of potential with this lending protocol. And I will also say, you framed it initially as it is an under-collateralized lending protocol. The way the primitives on the XRPL build are, definitely on a modular basis, so things can evolve over time from here. And we do also think about opportunities more on the retail side through different angles to accommodate, for some of the things we've seen successfully being adopted in other ecosystems.
Yeah. Absolutely, and ourselves at Commons, of course, are also very active on that, on offering exactly these yields both to institutions as well as to retailers on different types of models, also on a B2B2C. So working with different exchanges to indeed incorporate this truly, I think, remarkable lending protocol, which basically enables to aggregate liquidity from different assets that lives on the XRP Ledger, mainly focusing, of course, on the RLUSD and the XRP. And touching on them again is, I would say, the two key liquidity pools that we have. How do you see the differentiation between the two? Of course, RLUSD is an extremely regulated asset and a stable coin. Where do you see both of them putting into work? What are the key differences? Where do they have unique features?
Yeah, thank you for the question. So the headline there is I view their roles as very, very complementary. And to compartmentalize it a little bit, if I think about RLUSD and stablecoins more generally, for me it's kind of like the natural bridge from off-chain financial activity to on-chain to the on-chain economy, and sort of like almost like an onboarding vehicle. Users of stablecoins, they're familiar with them. It's good to settle stuff. It's keeping a stable value. So that plays, I think, a very, very important role. If I think about XRP, there's quite a few things to say here. First and foremost, as we're seeing, the financial system of the future migrate on technologies like the XRPL, and obviously, XRP is poised to play a dominant and important role there, given just the privileged stage it has on the ledger, in the sense that it's a gas token. When there's not enough liquidity on an order book between two currencies, functions like auto-bridging source liquidity via XRP automatically. It's the only native asset. Everything else has an issuer. And there's something, I think, powerful about cryptocurrencies as a whole, or particularly cryptocurrencies like XRP, in the sense that it's obviously very efficient. It's counterparty risk-free. Stablecoins have issuers, as have fiat currencies and other financial assets. And XRP is backed by code. There's also, the notion around like supply limitation. There's a supply limited on XRP, and sort of like it's jurisdictionless, it's neutral. And so I really think of it as more like a glue on this network from where liquidity can flow through. And we're seeing some of this already materializing, for example, with Ripple Prime. XRP is used as margin and a form of collateral on their platform, and has seen a lot of growth throughout last year. I think there's a couple of billion of XRP that is now utilized on the platform. And I really truly believe in the potential, as the world adopts more of these cryptocurrencies as kind of like widely accepted forms of value in society, to facilitate commerce, for its roles to then becoming increasingly important. And I also believe, not to say like, hey, fiat currencies are going nowhere. I do believe in coexistence, right? And in relevancy around like fiat-based currencies in the future as well. And maybe as the last point, there's the whole notion of the agentic commerce. Maybe we can touch a little bit later on that one as well. And the question that I just put out there, who do you think, what is their more designated form of value that they will be using as stablecoins? Is it cryptocurrencies like XRP, Bitcoin, or Ether? I don't know. We'll see.
Absolutely.
From the first native DEX to tokenization, identity, now credit, an institutional-grade lending protocol designed for real-world finance. And if you think this is still early, look again. The shift already happened. Institutions aren't experimenting anymore, they're building.
We saw a huge transition from experimentation to live use cases. We've seen the volume of stablecoin transactions grow, really positioning them from one side as a core monetary base, but from the other side as an infrastructure layer. And we're seeing much more movement, I would say, towards the more payment purpose-built blockchain rails, such as the XRP Ledger and others. And in essence, we're seeing much more that the conversation is moving from which stablecoin to issue to on which rails and which settlement rails are we going to do it. And my question to you is basically, how do you really see stablecoins as an infrastructure, or do you see them still as an add-on product for many organizations?
Maybe let me take this one first. And again, I'm speaking from a centralized exchange point of view, and I'm very curious to hear what my colleagues here at the panel are going to say. We start to see that one as infrastructure now. We can be very much clear about that. We've been a long way. We just built that system. As you say, the numbers have been growing and growing, but at the moment it's a fundamental infrastructure. Without stable coins, we can say we'll be pretty much not in the position to operate as a centralized crypto exchange. All the infrastructure, everything just goes around that one, and has been building well beyond that point as well, in terms of usage, in terms of what our clients are doing with that, in terms of the possibility that the stable coins have brought to us. So definitely a core infrastructure for a centralized exchange, always in demand, always in demand to add more, but this is how we treat them.
And finally, here's Ripple Labs today.
So you went from payments to now a multi-layer stack of services. Can you maybe explain this transformation? Because you said some happen organically, some by build-out. Can you give us like a full picture of what Ripple is doing and what tools you have under your belt today?
Yeah, absolutely. So as I mentioned, this concept of the Internet of Value has been at the core for a while, and starting, not at the beginning, but several years ago, it's pretty audacious, and it entails a lot of things, so where do we start? And we had the perspective that we wanted to go where the pain was the most acute in terms of that, and that was cross-border payments. So many people think of Ripple as a cross-border payments company, understandably. That's our sort of origin story, if you will. And we applied technology to facilitate atomic payments, initially even without using a digital asset. But then there's been this sort of constant drumbeat, this evolution of how we've expanded that offering, meaning payments got more robust. We did leverage digital assets to facilitate cross-border payments. And in listening to our customers and looking at the market, we've really evolved this into a sort of full-blown portfolio of blockchain infrastructure offerings. So payments, then in doing that, we realized we have to get good at liquidity, moving in and out of different assets, be it fiat into digital assets, stablecoins. We built those capabilities internally. And we'd see where our customers would have some pain points. For example, initially we weren't in, as they say, the flow of funds. So we weren't a regulated entity. So they'd work with us on technology, but then to work on-ramping or off-ramping digital assets, they'd have to go work with a digital asset exchange. Well, that's another relationship. It's another point of friction. It made it more complex. It added more risk for them. So we then went and applied for licenses and are now licensed in, we have 75 plus licenses around the world. So we now can take on that end-to-end payments challenge. Then things like storage. How do you reliably store digital assets? Again, instead of requiring our customers to go and form other relationships or seek other vendors, Ripple went and made some acquisitions in that space. And then that just continues, again, this combination of looking at the market, listening to our customers. So we've added assets around prime brokerage via acquisition last year, treasury management systems via acquisition. We organically launched our own stablecoin, RLUSD, a US dollar-backed stablecoin. Made acquisitions in terms of stablecoin rails for payments. So really, we've put together this set of blockchain infrastructure that we take to market in a holistic, integrated way.
This isn't a single product, it's a financial ecosystem. If Paris showed us anything, it's that the future won't be built by one system replacing another, it'll be built by systems working together. In the XRP Ledger, it's wiring that future together. Thanks for tuning in into some impactful insights sourced directly from Paris Blockchain Week panels and interviews. Next week is XRP Las Vegas, April 29th and May 1st. I anticipate more alpha and key players to be in the room. If you haven't secured your ticket, scan the QR code and tell Brad Kimes that Ray Fuentes sent you. Remember, if you're paying attention and watching this video, you're early. Thanks for tuning in. Love you mucho.